Hi, everyone. This is Justin with ProShip. We're going to be waiting a few minutes here while attendees continue to join. In the meantime, my guest and I, we're going to probably have a little bit of chat about Amazon, as we know it's probably on everybody's mind that's in the logistics world. Gentlemen?
Maybe open it up with a question to the panel. How do you think Amazon is affecting us currently, and how do you think they will affect us in 2023?
I mean, I could start this one out. I think, on our side, we represent a lot of shippers out there, and a lot of shippers need Amazon and their marketplace to be successful. And, we've seen a lot of changes over there as far as them kind of throttling on-hand inventories and, kind of creating more bottlenecks for some of our clients. But, high level, clearly they're extremely important to most of the clients we're working with. And I think most of those clients are struggling to kind of manage their supply chains into and out of Amazon right now.
Yep. And for those of you who just joined us, we are waiting a few minutes here as everybody joins. In the meantime, the panel is discussing the impacts of Amazon as we wait for others to gather. Nate, did you have some thoughts on Amazon?
Well, I usually focus on delivery, and I think, I don't know how long it's been that there's been predictions, I guess, of Amazon jumping in and disrupting the market. I want to say it's been a solid 5 years or so that's been out there. So it hasn't happened yet. I don't know, of course, if it's going to happen soon or next year, but given maybe some of the changes within their network, the fact that they have capacity, and they're looking to fill it from a fulfillment standpoint, you could start to usually can find a reason why they could or would. So maybe this is the year. Whenever they decide to, I don't think there's going to be too many barriers. So we'll see if that happens. But I'm a little bit more on the side that I don't think they will, unless it is incredibly beneficial and self-serving. And so if they can't do it efficiently, introducing volatility and package volume into their network, then I don't think they'll do it at scale. So I think they'll be selective with it.
Amazon is going to be our sixth topic, and Nate, I've got some updates for our audience members here on what Amazon is now capable of doing. But for those of you who have recently joined us, we are waiting in a few minutes here while everybody continues to join. In the meantime, the panel is kind of discussing what's going on with Amazon, the influence Amazon's having, what is the greatest thing they're doing right now. Mark, let me throw that to you.
Sure, and I definitely agree with and will add on to what the other panelists have said so far. I think that as time goes on, the drumbeat gets louder for them offering more. And what we've seen are several things that seem to be sort of a soft launch of some parts of the service, almost like a pilot on the periphery to offering something bigger. And what I think most recently has been happening is the offering of Buy with Prime, where Amazon is allowing their services to be sold as a package delivery service or warehouse fulfillment service for certain third parties who already use them as a warehousing or distributor on the actual company website. So Buy with Prime was one of those drum beats, if you will, where I think they may be indicating a larger launch of more services in the future.
Excellent. We could not have timed that better. We waited about 5 minutes for people to continue to join. With that, I'd like to welcome all of our audience to the expert panel, pivoting to a 2023 mindset, what it really takes to thrive in a time of parcel volatility. So you're going to hear a lot about volatility today. But first, let me go ahead and introduce my speakers. We've got Nate Skyver, Mark Taylor, Sean Mueller, and myself, Justin Kramer. Nate, do you want to go ahead and give us a little bio?
Sure, thanks, Justin. My name is Nate Skyver. I'm founder of LPF Spend Management. And essentially, I'm an independent consultant. I've been consulting for 3 years, and primary focus is to work with package shippers to help them negotiate better carrier contracts, but also to source the right carriers and services that align with their shipping strategy. I also spent 17 years in retail before consulting, largely focused on parcel in some way, but also e-commerce. And I try to incorporate kind of that experience, kind of the customer point of view, shipper point of view, into my consulting services.
Excellent. Thank you, Nate. Mark, would you like to give a bio for yourself?
Sure. I'm Mark Taylor. I'm the Director of Parcel Consulting at Envista, now Kerber. And my industry background is 20 years plus in the industry. First at FedEx, where I learned about this industry and became very fond of it and have made a career of it. Was there for a decade at FedEx, and then as a shipper at Lowe's Home Improvement for 3 years, helping them to incorporate and build out their omni-channel fulfillment network. And now I'm with Kerber, where I help clients every day to negotiate parcel agreements and analyze parcel programs to help them build out their capabilities and minimize cost.
Excellent. And Sean, as an active shipper right now, could you introduce yourself?
Yeah, I'm Sean Mueller, VP over at Symbia Logistics. We're a pretty large third-party logistics company focused on kind of multi-channel and omni-channel fulfillment, representing about 120 large shippers through the network, and doing quite a bit of kitting, value-added services, and transportation for our clients as well.
Excellent. Thank you, Sean. And I'm Justin Kramer, co-founder of ProShip. I've had the privilege of working on some very large shipping software systems. I've been developing, designing, selling, deploying shipping software for over 2 decades, systems across multiple continents, systems that can peak at above 1 million a day, and systems that will easily allow more than 100 million shipments a year. So hopefully we've got a great panel for you all today. You're going to enjoy what you get to hear. But first, let's do a little bit of housekeeping. Now, number one, we love interaction from our audience. We have an entire team sitting behind the scenes here waiting for questions. Please feel free to post those questions. We've also got some takeaway for you. Every single one of us have put some handouts in, so please feel free, pull those handouts down, get that takeaway information. And of course, if you've got questions at any point in time, please feel free to put those in the question spot, and our team will start to prepare them for us. What are we going to talk about today? Well, 6 items. We're going to talk about 2023. You know, what's it going to look like? What are we thinking about? We're going to talk about volume and capacity. I know that's on a lot of people's mind, especially the last couple of years. Parcel pricing, that's going to be a big one. We're going to spend a lot of time on that, but not at the cost of not talking about carrier diversification, labor and other costs that continue to pressure our industry, and of course, as we were talking about, if you were on at the very top of the hour, we're going to come back to Amazon and talk about that, how they continue to influence our entire marketscape. As we move into this, though, we would love to know what you guys are thinking. Right now, you know, do you expect this season to go smoothly? So we're going to go ahead and launch this poll, give you guys about 2 minutes to respond. Okay. As we're doing this, you know, the whole idea here is we'd like to get a feel for what our audience is thinking. Do you expect peak season to go smoothly? Are you expecting the worst possible results out there? It'll just be very interesting. We have had a couple of years of pandemic here to harden a lot of those systems. Are they hard enough or not? Okay, I can see the results starting to pile in now. I'm going to continue to watch it to see if they slow down. All right, I'm going to give it about another 10 seconds or so because they're starting to slow down just a little bit. Okay, and I'm going to close the poll and let's look at the results. Pretty evenly split. As a matter of fact, as the things were coming in, it was almost 50-50 the entire time. And had I stopped this another 10 seconds earlier, it would have been 52-48 the other direction. So it's very interesting to see that we're almost evenly split here, well within the margin of error, about what's going to happen this peak season. So with that in mind, we will talk about some of the things. Hopefully you all will continue to feel better and better about peak season. But let's go into, Nate, I'd love you to start off with the outlook for 2023. What are you hearing? What are you seeing? And then we'll roll into the rest of the panel here.
Sure, and the poll result was interesting because it was almost split, which is to me kind of uncertain. And I think I know that was Q4 and peak season, but I would say roughly you could translate that at least into the first half of 23. You know, the only constant is change, and of course we all know the parcel rates will continue to go up. And I think some of the things that certainly are factors now, and at least will continue to be for the next several months, really pairing kind of the first to demand forecasting and inventory together to an extent. Inventory has been a topic, but a challenge for well over 2.5 years at this point. And periods of not having enough, we're largely as a market in a position to where there's too much, or if there isn't enough or too much somewhere, it's not the right inventory. So figuring out, I think, that demand from a consumer standpoint in an inflationary environment and determining when to liquidate, when to discount, it makes it very difficult from an operations standpoint, both fulfillment and transportation providers, to react, to know when what's going to happen. And so I think that's creating uncertainty now, and I would expect that will continue into next year. And part of that is then, you know, translating that to parcel volume and capacity, which we'll talk a lot about. But that's starting to even out, at least on the illustration. We're at about equilibrium at this point. And so the question is then, if that's the case, how long does that sustain, and what does that do with pricing? I think that's a pretty big question to be answered, not on this webinar necessarily, but in the next several months. And then another thing, I think, even though the volume, say, is softer, and so from an operating kind of environment on the carrier side, that should be beneficial to where there aren't as many constraints and they can operate efficiently. But that doesn't mean there isn't risk inherently in working with UPS and FedEx. And right now, it's more so, I guess, the concern would be with FedEx, with their ground contractor situation, some challenges there, a little bit kind of short-term concern there, whereas UPS, it's next year, and it's the labor, the Teamsters agreement rather, which is expires at the end of July 23, but that becomes an item of concern for shippers really at the beginning of the year, and it grows in kind of concern as the year progresses. So all that said, that's kind of where we are and kind of where we're headed. And we already briefly talked about Amazon. That's always, I think, there in the background as a factor potentially as well. Could disrupt the market technically from a competitive standpoint, which to me means then that's an opportunity from a shipper standpoint as another option. So that's what's going on, I think, in 23.
Interesting. Sean, I'd like to pull you in here, especially about that the inventory. I know we're going to talk about some real estate. We're going to get deeper into open capacity and things of that nature. What's your initial thought about the available warehouse space and the inventory that is supposedly flooding the entire U.S. market right now?
Yeah, I mean, I think, the good news here is some parcel capacity on the carrier side is great. To me, the poll result is fascinating, right? I mean, if you would ask that same question the last 2 years, it would have been 90% no, right? So I think it is interesting that it's a little more blended. I think that's great for shippers because the packages may show up on time, the carriers may show up and actually pick these things up. I think on the warehouse side, capacity is tighter than it's ever been. And so obviously proposing some challenges upstream of the parcel side of things. Obviously through this pandemic, we came into a just-in-time set of supply chains throughout the country for obvious reasons because of efficiencies and trying to keep things lean. And a lot of folks got caught off guard and shifted to this just in case mentality that I think we're heading into now. And with that, they doubled down on orders, more containers. A lot of that stuff arrived late, which is now causing kind of this glut of inventory we're seeing. And then, married up with direct to consumer sales dropping sooner than people anticipated, and retail is up, but it's up softly. There's just an unbelievable amount of inventory out in the US.
And Mark, what's your initial thoughts on the 2023 outlook?
Yeah, as we go into 2023, Nate used the word uncertainty, and I think that that's something that just prevails. We seem to be getting these kind of dissonant, different messages from the carriers, because on one hand, we see that volume is softening, and across the shippers and across our clients that we talk to, that's pretty much universally the case in retail. So we know that the capacity challenges are lessening, or should be, but then we see things like the pricing announcements from the carriers that seem to indicate that they think that we're still in 2020 from a pricing situation. So there is kind of this cognitive dissonance that's going on right now. And I think that as we go forward, what I'm hoping 2023 does is it clarifies things a little bit more for everyone involved.
Yeah, I think the last word of the title of this webinar, volatility, really sums up what everybody is talking about here. All right, Nate, I'm gonna come back to you. I think to understand where we are now, we kind of want to look back a couple of years and see how far we've come.
Yeah, and we'll go through the prior 2 years pretty quickly, but this is just the quick snapshot of exactly what that growth looked like from 19 to 20, of 37% over 5 billion package growth in a 12-month span, and really in some cases it was a shorter time frame than that in 2020, and really unprecedented growth, and that changed kind of the outlook or the operations from a carrier standpoint. And so when we look at that and how that was allocated, the big four, including Amazon in this case, even though largely they're handling their own volume, comprised over 99% of the market. Now, just to clarify, kind of what we're looking at here is the numbers are represented are packages delivered, and so it's based on the Pitney Bowes Shipping Index, and this is 2020, and so the carriers over on the right are kind of faded out a little bit. Those are actually postal workshare carriers, so they work with the Postal Service only for delivery, which in this view is why they're not represented there. But again, with that growth, then we have overwhelmed networks. There were package volume caps that were very dynamic from mostly UPS and FedEx, but other carriers too. So it wasn't just peak season. It was as this volume kind of ebbed and flowed, there would be sudden volume caps. They would come and go, and so it was really, really difficult to work with. And that was kind of the story of 2020, which is the massive growth. 21 was playing catch up from a capacity standpoint, and that was really the focus of the largest carriers in the market, particularly Amazon as well. I think over the 2-year period, they increased their fulfillment network actually by 100%. UPS and FedEx not quite to that extent, but they also invested quite a bit in the network. So when that happens, and we have regional carriers also doing the same thing, also expanding service areas, this surge in volume, there was still a 5% increase in 21 over 20. So it's a huge baseline you're now working off of, and that presented opportunity for everybody on the carrier side. UPS and FedEx, they could be incredibly selective with the customers and volume that they chose to accept into their network, and then also new market entrants came in, and that really, wouldn't say introduced competition immediately, but provided more options. By the end of the year, there was still, according to some third-party reports, a bit of a capacity deficit, and then we roll into 22, and and volume kind of slowed down. Year to date, we're looking at UPS, USPS, and FedEx being down over last year 3 to 5%, pretty consistently. And by the way, these numbers now are just a swag, is what I'll call it, of taking the 21 numbers and adjusting down a little bit based on year to date. But one interesting thing is that although capacity expansion has slowed, these alternative carriers that have entered the market, plus the regionals already there, they've increased share slightly. We can say around 2% or so, and that's a kind of again an estimate. But just the amount of volume that they're able to handle now has more than doubled, according to this report, since 2020 or 2019 rather. And so that, I think, plays very well into next year. And those options are there. How much are they needed? How much should shippers allocate volume across multiple carriers? So that, I think that's part of kind of what plays into 23, along with the fact that we already talked about nobody knows exactly where volume is going to land.
Yeah. So Mark, you're involved in a lot of this capacity planning and things of that nature with your customers as well. What takeaways do you think that our viewers should take from this?
I think that as we go forward, we certainly can look at what's been delivered, and we know roughly on public reports for quarterly business reviews from the major carriers plus Amazon what they're carrying. But one caution is that it's very difficult to understand what the real capacity of the entire parcel industry is. Individually at each carrier, there is a flex that has a wide spectrum of how they could increase capacity or decrease it, depending on how volume is running. So really, how peak is going to go, how we go into 2023 is really dependent upon the carrier's planning for the volume that they expect and how well they manage to that plan. How either of those, either the planning or the execution goes, is how well it will turn out for us as shippers and as folks that are helping shippers.
Sean, did you want to add anything to this?
Yeah, I think it's interesting. I mean, just the planning execution, again, what we see with most of our shippers is, there's less visibility than there's ever been in my 20 years in this industry, right? And forecasting is a little bit out the window, it seems, which kind of makes what Mark said a challenge, right? And again, as we talk about the capacity constraints and the ongoing labor constraints on the actual fulfillment side, I think Mark's right. I think that's the risk, right? I mean, just it's hard to stay 3 months ahead of everything right now. But the more work you can do there, just to be proactive with that. But again, I think that's the biggest challenge, like Mark said, it's just forecasting to be out the window.
And I want to put one thought in our audience said, and the four of us have discussed this multiple times. Just because the carriers have a little bit of capacity available doesn't mean that's actually that everything's going to reverse. None of us want to run a warehouse at full capacity. None of us wants to drive our car at max RPM. We need some slack in the industry in order for things to be able to go back and normalize. So always remember that as we start to see these indications of capacity availability, we may not exactly be seeing a sharp reversal and heading back towards 2019 levels of capacity availability just yet. Okay. With that, let's go ahead and Mark, I'd love for you to talk a little bit about FedEx and some of the other things that we're starting to see over the past year.
Yeah, and Nate really set the stage for this in previous slides and his topics, because when we look at 2020, if it weren't so frustrating for all of us to plan to and to have put up with everything that went on there, it would be academically very interesting and economically very interesting, because not just parcel distribution changed, but commerce in the United States changed in 2020. More people shopped online, more volatility was introduced into retail. And so what we've seen over the past 2 years is, as 2020 played out, we saw things like UPS and FedEx firing customers that weren't as profitable as other ones to really take advantage of the capacity that they had available and maximize profit. We saw the same thing happen in 2021, although the awareness and the planning as a result of that awareness were better. And then when we come to 2022 now, the volume has plateaued or softened. Some of the changes or some of the challenges that 2020 represented continue into 22, but they morph and change into a slightly different challenge. One that has persisted through this entire time period are the challenges with labor. So although we have capacity in the buildings, we have capacity on the freight lines, and we have some extra, in quotation marks, capacity than we did, say, in 21, we still have that labor constraint out there. And as Sean feels, I know, we have this inability to hire up to the people that are needed in order to support all of this parcel movement, freight, and 3PL assistance with it. So I do think in 2023, we are going to see some persistent problems with labor, although it will change. And one of the most distinct parts of that labor challenge is going to be with FedEx, with the carrier, with their contractor model being challenged, and with UPS and their Teamsters negotiation happening with an expiration of July 2023. Both of those things are going to persist and challenge us in 2023.
You know what? Since you're talking about labor right now, maybe now is a good time to pull out. We had some questions that I think revolve around labor as well as green, and I'm just going to kind of combine them together. Both Pitney Bowes and Tesla asked information about sustainability, but also about automation. And as part of this sustainability, we can't help but look at battery electric vehicles. We all know that every time a carrier gets a new BEV for a delivery vehicle, they're throwing it in the newspaper. They're greenwashing as much as they can. We also know that as these BEVs come out, and we're also seeing smaller solutions out there for drone delivery, whether those are actually flying drones, or what I think I've seen a little bit more successful is the automated self-propelled vehicles out there. Do any of you have any thoughts on that and how that can, number one, affect labor, but number two, affect emissions and sustainability?
Well, if we're talking about robotics, I think that there's a lot of buzz about drone delivery, but doing that at scale is an extremely difficult enterprise, and there's a reason that it's taken decades to roll out. In my humble opinion, I think the most effective place for robotics will be in the DC and in the warehouses, where there's a consolidated part of volume. It is safer to operate, and it's certainly not as complex as flying drones over someone's house. Yeah. So I do think that there's room for the tech there, and there's a need. But I think that it plays more of a role in the warehouse.
I would agree with that.
Go ahead, John.
Yeah, I was just going to say, I fully agree with that. I think, 3PLs and fulfillment centers and warehouses have really struggled with the technology in the last 10 years because it is so new, everything's so shiny. It's hard to understand what that real ROI piece of equipment is. I'd say in the last 2 or 3 years, we're seeing a lot more real applications. A lot of that hardware is heading to a SaaS model, which makes a lot more sense for a warehouse operator. And I think the other challenge, I mean, like you said, Mark, I mean, labor is going to be a big risk in 2023, right? I mean, 3PLs and warehouses across the country are struggling today to continue to get people in as they have through the pandemic. And a lot of these increases in rates, right, to pay people more to get them in the door are happening. And that's just kind of getting passed downstream, right, which is kind of compounding these inflation issues we're having. But, you know, some of the smarter 3PLs are investing in automation right now. So 2-3 years out, right, it won't be just, you know, we need a lot more money. It will be, hey, we're providing a much more efficient solution with put walls or ASRs or, you know, many of the new types of automation that are on the market.
Yeah, I think we've already. Oh, go ahead, Nate.
I was just going to add, I think we've seen some evidence in the market too, just on the parcel, you know, parcel provider side, I guess is where I'll focus, around robotics and the attention on it and investment in it from a, you know, handling and sortation standpoint. FedEx has expanded their partnership with Berkshire Grey, and I think it even included some share acquisition. So there's that. DHL e-commerce, Pitney Bowes have also had, you know, robotics parcel sortation added, and it's in the plans for their network, I think in 23. Amazon, and I'm trying to recall if this was Q4 actually, you know, post Q4, the challenges they had last year basically pointed to labor and inefficiency in the network and increased operating costs. They had to reroute packages, and they honestly sounded upset, like annoyed that was the issue. And so I think you see that everyone's dealing with it in a certain way, but robotics, I would think, would continue to be a focal point, provided, you know, financially it makes sense.
Right. You guys are very well grounded in reality and today. So I'm going to go ahead and take this a little farther out in my comment. I agree. We're going to continue to improve efficiencies in the warehouse. It's always been a place of advancement of labor saving devices, conveyors, sorters, all of these things. For the last several decades, we've been building that. I think what the possibility that we're going to see over the next 5 years to a decade is some automation continuing even further out, maybe hub to hub automated driving. I think definitely what we're looking at, especially you mentioned Amazon. Amazon's got a huge contract with, I think, Rivian and Canoo in order to electrify some portion of their fleet. Nobody ever gets any real numbers to see how that actually should impact it. UPS and the other carriers are always, like I said, they're buying BEVs for final mile everywhere. But we are in the 5-year period where we expect to start seeing automated tractor trailers come out. I'm sorry, not automated, but BEV tractor trailers or hydrogen-based tractor trailers. Two things that can really help to reduce the overall carbon footprint of a delivery network. Right? We're starting to see these things, but those of us who are tech savvy also know that they offer their own level of automation. Maybe it's a road train. Maybe it's as a delivery driver is going through a couple of stops side by side, the truck is following them down the street. They don't have to actually go in and out of the truck every single time. You know, all these things which can do more with the labor that it's got, or things that can actually eliminate some of the more tedious parts of the last mile, the true last mile of the process. I think these things are becoming a possibility, though they're not something I think anybody's willing to trust as of yet. But I do think that the fact that the next 5 years will be the half decade of the BEV and hydrogen rig, I think that's going to do a lot to adjust the carbon footprint for all the carriers. But on the other hand, I suspect it's going to be more than a decade before the carriers remove fuel surcharges from their pricing. All right, let's keep going here. That was a great sidebar there. But Sean, wanted to talk to you, and I really wanted to bring this back because let's face it, if anything has really done well within the last few years, it's been 3PLs, because the more zone 2 you can do, the better, right?
Yeah, absolutely. No, and I think, it's interesting talking about all the capacity on the parcel side. Like I said, as you can see here, much like all the non-common carriers that evolved in the last 2 or 3 years, we've had quite a few 3PLs emerge through this pandemic. What's interesting in this slide is everyone on the left is what I would consider more of a traditional 3PL, pallet in, pallet out, and you've got your large guys and your family-run guys. And then on the right, you have the folks kind of coming out of tech and focused on e-commerce. And we've got a lot of 4PLs which have entered the space, which is interesting, right? Because they're not really adding capacity, space for people. They're just trying to make deals, ultimately sometimes creating a little additional noise out there. But at the end of the day, I think shippers are unhappy, right? They've been unhappy for a couple of years with their carriers, their 3PLs, their partners, just with the state of labor and obviously the transportation capacity. As you can see with Shopify, obviously more and more guys like that entering the market, really to try to serve the needs of the shippers unhappy on the warehouse side, and what can they do? And I think coming into this year, as we've talked about, next one, Justin, if you want. I think we, really talking about the space, right? So bottom left, as you can see, as we get to the Inland Empire, it's probably one of the worst cases in the country. They're down to a 0.6% vacancy rate, which is pretty insane. And what that means relative to this whole discussion is, like you said, Justin, you may want to be within 2 days of everyone in the U.S. It's getting tougher, right? Because with less space out there, there's kind of less options of where to position your product. And we're actually seeing some consolidation, and as you see in the case of Amazon, actually closing some facilities, which kind of short term is compounding the capacity issue on the warehousing side. And then on the right, you can see, the rents just continuing to go up throughout the country. And this is doing a couple of things, right? It's driving up the cost of this excess inventory we've talked about in the industry, which is tough. And Mark and Nate said, right, I think the big question for shippers is when do they start liquidating with rents going up and carrying costs causing them to have to drive.
And let's roll that back for a second. When do they start liquidating? I think this is the first time in my professional career I've seen retailers not wholesale last season's stuff. Are you seeing that as well?
No, yeah, seems as though they're holding it. And like I say, coast to coast, these places are full. Rents going up as high as 50% in some markets. Even more recently than the slide here, we're starting to see some rents doubling, right? Which again is just causing more capacity issues. So again, I think what's interesting with all of this is as you look at 2023 and beyond, and trying to navigate next year, carriers having extra parcel capacity is great. We do need this buffer, like you said, Justin, and the challenge with warehouses running at 100% capacity or 100% full, it's a challenge, right? We all want to be at 90%, to be honest. So there's room to move, room to surge with inventory, and with everyone at 100, it's causing a little bit of inefficiency in the system. And yeah, I think that's the bright side with the parcel capacity is if they do have that 5 to 10% capacity, that's a big win and probably where they want to be. It'll be interesting to see where they land.
Yeah, nobody wants to be breaking down a pallet in the parking lot.
No, absolutely, that's correct.
All right, let's go ahead and let's switch to our next topic, which is parcel pricing. Mark, can I get you to go ahead and I'm thinking of your coworker there. Can I get you to go ahead and start us off with parcel pricing?
Sure, and don't worry, Justin, I've been called worse. Very briefly, I think that some things that we can't go through this presentation and not discuss, or at least introduce, are some of the most recent pricing discussions and articles. So really briefly, we saw peak surcharges be announced, and among the interesting changes there were the bases on which residential peaking factors were changed, and that got updated. Thankfully, that's a welcome update, because prior to that, we had been basing surcharges on February of 2020, which seems like a decade ago. Other things that have happened in the industry are some of the announcements, particularly FedEx's announcement of the 2023 GRIs, is something that we'll be talking about for a while. The largest single GRI of any year, 6.9% on transportation rates with FedEx. That's unprecedented, and I'm sure as we dig into it and find details like the new 8% late payment fee that none of us are welcoming, and we'll continue to see how that plays out through the next bit. In just a moment, I'll talk about how the negotiation trends are working, and we'll discuss more about how anecdotally the negotiations are going. But Nate, did you have anything to add here?
I think you summarized it pretty well, Mark. These are the three things right now I think that are top of mind, literally for a lot of package shippers. Of course, the GRI that in the negotiations of the last two will continue well into 23, and I think that also with the GRI, there's already been scrutiny actually immediately from analysts who cover FedEx, basically saying, okay, so you're having a softer volume environment. How can you substantiate the largest increase you've ever issued? And at the time, which was last week, 2 weeks ago, the answer was inflation. And so, if inflation eases, I'm not an economist, so just bear with me. But if that eases over the course of 23, well, I don't know that there's as much of a justification, especially if volume's soft. So again, I guess uncertain still, but that would be one thing that the 23 pricing is going to be interesting to see how that goes.
And Justin, just to chime in, one thing we're also seeing is just, with this tough 2.5 years, a lot of shippers seem really traumatized right now, right? And, when it comes to negotiating or touching any of this or reaching out, I think you're seeing a lot of people who A, aren't doing it, and B, are somewhat afraid to break anything right now if we're heading into a place of maybe some stability. So, but with what's coming up with Mark's next slide here, I think it's fascinating that now is the time to negotiate, but we are seeing a lot of hesitancy out there, I think, to poke the bears, if you will.
So traumatized, I like that word. As a matter of fact, let's look at our audience and see, how are you feeling about this? Are you traumatized? Do you feel that the carriers have all the negotiation power, or no? Are you getting your feet back underneath you? Do you feel you now have the power, or is it split? What are you guys looking at? How are you feeling about it? Let's go ahead and get some information from our audience to see how you all feel. 8% late payment fee. That's is there any grace period in there? Otherwise, that seems like it's going to put a crimp on a lot of auditors out there.
Yeah, can we negotiate that away?
Yeah, that's the list rate that we're going to be facing in 23. So yeah, there are a lot of negotiation topics and some to be discovered, frankly, as we pour through all the details of the new service guides that will eventually be published.
Yeah.
All right, we're going to give this another few seconds. I still see some votes rolling in. How do you feel about your negotiating power? Do you feel the negotiating power is with the carriers? Is it split 50-50 or 50? Are we getting that even feel going on? Or do you as the shipper have all the power? Okay, and 10 more seconds. Thank you all for participating. And our results, pretty good. Looks like we think it's 50-50, a bit of an even playing field. If anybody has an advantage, it looks like it's just slightly in the carrier's favor. Okay. With that, Mark, let's look at this pricing power index that you've been tracking for a while.
Sure. So our team tracks and trends the Freight Waves Pricing Power Index. I do recommend that anybody that is interested in the parcel industry follow Freight Waves. They do have some good articles and have put together some good information. So one of the things that we look at is the pricing power index. As the number increases, the more pricing power the carrier has. So what everyone has experienced is really indicated by the graph. If we look at 2020, we can see a shift in the leverage in the network all the way up into a carrier leveraged network. And we have been camped out there for 2 years. As capacity was in a shortfall, we have seen pricing power be firmly in the hands of the carriers, and they've come to us with changes like increases in fuel surcharge, surcharges for peak, surcharges for demand that is non-peak, surcharges for phases of the moon. I don't really know what's next, but the good news is on the right-hand side of the graph, where we start to see this green line come back down to more of a normal spot in a more neutral area, where in some cases we might see some of that carrier behavior still as leveraged, and anecdotally, as my team and others, I believe that Nate would agree with this as well, anecdotally, we've seen kind of some mixed results in the past year. We've seen some results in negotiation where we clearly think it's getting better, and then some that we get some of the same comments as we've had in 2020, 2021, where the carriers still kind of think that they can toe the line on the capacity shortfall. So I guess in summary, we do think that the negotiation is getting better from where it's been. And going into 2023, I do think that this is going to be in a better place for shippers.
Yeah, I'd like to remind our audience that you can see that there's a URL on this slide. This is one of the handouts. You can pull this down along with a whole other slide of what we as experts use to inform us. Nate, let me throw it back over to you.
Yeah, I agree with what Mark said, and I think that the last point of the fact that there's still been some, I don't say volatility is not the right word, but kind of variable responses from UPS and FedEx. So it's not a step change in the market that all of a sudden, if this continues down and to the right, that it's universally an environment where it's favorable for shippers to negotiate. It's very specific to the individual customer, their package profile, the margin on the account, their ability or willingness to change carriers. Like UPS and FedEx generally know that. And so that's what I've seen also in some of the responses of basically UPS or FedEx responding and saying, we're going to actually hold on that 5% increase, and without saying, because we know you're not going to change carriers. And so I think it's very situational. That's not new, but I think it's still something that shippers should be aware of, that it's not, we're not going to throw the flag up and say, go negotiate everything, but there's room to negotiate based on whether or not your position with your carriers from a, how valuable is your business. So I think there's always a need for that information, but now I think it's more valuable than ever. So,
and they've made it more difficult to understand with some of the things that we've got on the screen now.
Yeah. So this is it's quite the colorful graphic here. So this is just one super basic snapshot of residential peak surcharges that are going to be effective, some of them here in the next few weeks, and actually some of them next week. And so it's not that those are new, but largely they've gone up for pretty much every carrier. And as Mark mentioned earlier, though, is that FedEx and UPS specifically, they did change the baseline period for the volume measurement to determine the peaking factor, the percent above that baseline. And so while that should be or could be favorable for some customers because it's moved forward to more of a near-term recent period. Also, at least FedEx has made it kind of more dynamic. They even stated that this was part of their first release of dynamic pricing. And so it is a measurement during one period of that volume over baseline, and then it's charged, I don't remember if it's 2 or 3 weeks later, now a lag, but that's a weekly change. So as if it weren't difficult to manage before, it is now more difficult. And so I think some of the things that shippers can do, those haven't necessarily changed, but they've continued to be important as far as being able to affect these surcharges. So we won't go through all of these, but of course, shipping volume out of the peak period, that would be that would be good. And we do see, a lot of retailers pulling volume forward, into October, right, to try to kind of meter it out a little bit. Shifting volume between carriers, Justin, I know you're quite familiar with that. Having the tech enabled to do that, and then also the carrier base to do that. And then I think the last one, negotiate with carriers. Normally this time of year, I would say, I'm going to put down the list. Don't even think about it. And while I wouldn't recommend doing it, every peak season, I've seen more concessions. I'll just say that on peak season surcharges, but they were negotiated earlier in the year. And so I think the take rate, capture rate from UPS and FedEx should be maybe a little lower than we've seen in the past.
Yeah. All right, I'm going to move this forward a little bit. I do want to tell our audience, this is not easy, okay? So make sure you know what's going to happen to you. Make sure you've worked with your shipping software vendor. Make sure you've run updates. Make sure you have all of these things in place. At least you get a surprise on your bill.
Yeah, then just real quick, Justin, I mean, this stuff is so complicated by design, right? And with all the new players in the market, I think it's hard to get your head around what you should be using, right? And again, it's not always just about price, right? That routing guide service should be important, right, Nate? So if you're with Absolutely. A 3PL, I mean, we help with this type of stuff for all of our shippers and try to stay proactive and in front of it. Your 3PL should, if you're doing it yourself. Guys like Nate are always great, as well as your software guys, Justin. But it's complicated, and don't hesitate to reach out. I guess what I'm getting at, Justin.
Yeah. All right, guys, we're running a little behind. I love the conversation we're having. I'm hoping our audience does too. Mark, I'm going to give you 30 seconds on this slide, and then we got to move on. Sorry.
Well, I'll just say this. When we look at the shelf life of this excuse, I think that we've presented enough in this presentation and conversation today to say that's at least questionable at this point. And I think that as we go into 2023, those conversations need to be had between the shippers and the carriers. If you're a FedEx shipper and you see your carrier parking planes in the desert, I think it would be time for a conversation about your express rates.
Yeah.
All right.
Not across the board, but it might be time to poke the bear. Is that what I heard? Okay.
Yeah. All right. Are people single sourcing anymore? That's really a question that we would like to kind of find out. How are you leveraging your carriers this year? Are you only using national carriers? Have you started to finally sprinkle in some regionals? Or are you like a lot of companies we found out there that are looking for capacity anywhere they can get it? And to kind of stage this, how are you doing it this year? Are you still adding carriers? Do you expect to add carriers this year? If that's the case, every carrier you can get your hand on. If you're comfortable and you've got a couple of the major regionals, probably that middle option there. If you're a diehard UPS or FedExer with a little bit of postal thrown in, that's probably going to be your first bet there. And I do have to say, gentlemen, that it seems like I continue to find out about more and more new carriers out there every single day. ProShip has probably not made more carriers in any sustained 3-year period than it has in the last 3 years.
I can attest to that one. I've had the opportunity to chat with many of them. So yes.
All right, I'm going to give it about another 10 seconds for anybody who's left to vote. We'd like to understand what you're doing here because it will help to color our conversation in the very next slide. And with that, let's go ahead and see how it all turned out. Exactly even. So it looks like 2/3 of the nation, 2/3 of our responders are using something other than just the major carriers. Okay, let's go ahead and get to it because I know we've got a lot more things we want to talk about, but this should clearly run, there we go. This should clearly run us into carrier diversification. Okay, Sean, let's start with you. I know on a daily basis, you are negotiating with carriers for capacity and things of that nature to try to help your customers.
Yeah. I mean, through the heart of the pandemic, we were looking at guys like OnTrack and LaserShip, and specific in those regions. You know, it was interesting. We were able to hit the West Coast from Reno, where we weren't able to do that with common carriers. So there's some opportunities there. And as these guys start to merge and create bigger networks, they continue to stay more attractive. So we're always trying to leverage some subset of the bigger guys in this space, and you know, we pretty evenly use the common carriers throughout the network. So we're seeing more folks. The challenge really becomes how, you know, geographically isolated they may be. But like I said, we've seen big wins in certain markets for certain shippers, and as they consolidate, I think they're going to get more attractive for sure.
Sean, I'm gonna pass a question along from Ferguson Enterprises, which asks, what are your challenges properly shopping across parcel, last mile, and LTL solutions on the same platform? Are you doing that first? But if so, have you found particular challenges as you cross those modes? And I would like to give kudos to Ferguson Enterprises. We do feel same day is a different mode than ground and express, just as they are from LTL. But yeah, Sean, do you want to address that question at all?
Yeah, we do rate shopping for our clients across services, but we'll keep it within a mode, right? So if that's overnight, we'll rate shop within that mode. So we're not shopping across modes at all. You know, sometimes we are looking for clients that just have that 2-day delivery window. So in those cases, we may, right, if it is cheaper to use a ground service instead of an expedited, like I say, in the case of a Reno to the West Coast.
Okay. And then one second, I actually got multiple questions, and I probably want to open this up to the whole panel. There have been a lot of questions from multiple customers about LaserShip OnTrack. Their pickup methods are different. What's going to happen to Lone Star Overnight? Are they going to get acquired by them? I know I myself have asked that question. So let's just go around, give everybody 1 minute. What's your thoughts on LaserShip OnTrack? And if you want to throw in some stuff on LSO, let's do that as well. Mark, I'm going to start with you, go through Nate, then Sean. Mark?
Okay, I'll try to be fast. So for LaserShip and OnTrack, always open to new alternatives, first of all, I want to say. But that's a good testament to how difficult it is to be a national carrier at scale. Those two have been in the game for as long as any of the regionals, and have been two that we universally recommend to go with first because they're established and they know what they're doing. But I do think they've got a long ways to go to build out a national carrier network. Nate showed on his slide the disparity between all of the regionals and all of the smaller carriers versus the nationals. So they've got a long ways to go before they have the networks built out and the saturation to run at the same pace as the nationals.
Okay. Sean, your thoughts on those?
Yeah, I mean, both those two guys have been really.
Nate, sorry, I said I was going to go in a particular. Nate, sorry.
Yeah, I can do that. So I think, so I agree with what Mark said, and the way I look at it, I look at it from the shipper standpoint of having the option, the capabilities from an OnTrack / LaserShip versus the market impact or competition. And I actually think those are almost two different answers, because LaserTrack and LaserTrack did it again. I think that offering to a shipper, opening up both coasts, provided it is well executed, will provide value, and especially for existing customers now and as they start to build out that network. And so from that standpoint, I think the plan that they have at least laid out to move into Texas, and I think Chicago is probably next, makes sense. But from a macro and market standpoint, it's not really going to make that much of a difference for quite a long time. And you just have to look at the numbers. And so that doesn't mean that LaserShip can't perform really well, be a profitable, growing carrier. But I think being the next national competitor, I wouldn't even say that at this point.
And Sean, sorry, this time I will actually follow the pattern.
Yeah, no, that's it. No, and Nate nailed it. I think for us, the big challenge is, most shippers want one vendor, right? It's just easier to manage, easier to understand, easier to track bills, invoices. So once you add LaserShip and On Track, right, it's just two more things, then you still need FedEx or UPS, right? That's the challenge. So you either need that expertise in-house to manage all that, to get that additional cost savings or additional service or shorter transit time. Because the right way to do it is a mix, right? 4 or 5 of these guys, but it does take the software and the internal expertise to manage that, opposed to the much easier path of just having UPS or FedEx, right? So,
yeah, and I'm gonna answer the question slightly differently, and one that I did a podcast recently with one of the guys from T-Force, and I think the term that came out of that is carrier rationalization. Right? During the pandemic, all of us did everything we could to add as much capacity as we could in order to keep our customers happy, right? As we start to see, again, I don't think that this 18 million parcels a day is really a lot of overhead availability, right? It's probably not even half of what we need to truly have a comfortable, flexible shipping industry. But we are going to need to start rationalizing the carriers we have. Do they, Sean, you're right. We'd love to have one carrier that does it all, but the carriers we have left meet the varying needs of our customers in all the regions we want to service. When is it going to be time to go from 25 carriers down to the core 10? Okay. And what we're seeing with LaserShip On Track, how we're seeing the likes of Speedy, Pitt, Ohio, LSO, are they going to be able to respond to that? Or are they going to be a do you remember? Okay, I don't know, but I think that every single shipper needs to start that process of rationalization. Gentlemen, does anybody have anything else that we want to talk about with carrier diversification?
Last thing, Justin, and it kind of plays on, well, your point of whether it's rationalization or actually just reviewing to determine if you're going to add carriers or change carriers, is actually, it's continuous, but start that process, well, I guess it would be Monday. Monday's Q4. So even though it's peak, that's when you assess, analyze, and lay out your plan, and then start to execute it the first quarter and not wait until February to start thinking about it.
Agreed. Couldn't agree more. All right, let's move to our second to the last topic, which is labor and other costs. Sean, we're going to pass this one to you. Tell us all you want to about labor and other costs.
Yeah, absolutely. We touched on it briefly, but labor costs continue to go up on the fulfillment side of the supply chain. Labor is also scarcer, so that's a terrible combination. I think our discussion earlier around automation really sums it up, right? I mean, 3PLs and whether you're shipping yourself or paying more for warehouse labor, you're likely to continue to pay more into 2023. And really the solution out of this is automation and efficiencies, right? And you're starting to see a lot more warehouses spend time on this, but I think that's the big opportunity in our space, instead of just paying more, passing the cost down and hoping it all works out. So
let's face it, it feels like the 2020s are going to be a decade of labor negotiations.
Yeah.
We still are not out of the strikes outside of the direct carriers themselves. The longshoremen are in some negotiations there. I think we just averted the railroad labor dispute, and we see in the retailers out there, we see a lot of labor wranglings going back and forth. 2020s are going to be very interesting for labor. It reminds me of my early memories of the 1970s when there was a lot of labor disputes. I'm a little older than I look. That being said, we all know how we're going to try to deal with that. There's going to be a lot of automation. There's going to be some pay increases. There's going to be a change in the way we interact with some things in society. I walked into a McDonald's the other day, not something I do frequently, and there wasn't a single person that I could talk to. And I'm like, might as well have ordered from my car, you know. But this is going to be the reality. Is with the lack of labor availability that we have, society as we know it is going to change, and of course that's going to impact what we do as retailers, manufacturers, 3PLs, and carriers, and everybody within the industry. Nate or Mark, did you guys want to add anything to labor?
No, just that, we live in a very strange time where, on one hand, individually, we're glad for workers who make higher wages now. And as consumers, though, we get the after effects of that for a higher cost of goods. So it's all works together in the economy. And going forward, there will be new solutions that come up, but it's going to take a while to get over this sort of bullwhip effect of where we're at with the pandemic and inventory and all the things that we've spoken about to this point.
Okay.
Yeah,
All
that's
right.
a good put it, Mark.
I'm going to jump to our last topic here, Amazon. I'm just going to come straight out and say, as somebody who deploys Amazon technology for multiple customer types, the concern of Amazon becoming a carrier, I am of the opinion that it is not a matter of if, but when. They have all of the minimum level of technology in place to allow it to occur when they're ready. We know that they have done pilots with this in 2 portions of the country pre-pandemic. However, I've yet to hear them doing any now. I don't think they have any active ones open at this point in time. But everything they need to do this with is in place. Maybe they need to improve a couple of things with their delivery networks, such as their time per delivery. But gentlemen, that's what I'm hearing. Now, what are you guys hearing when it comes to Amazon?
Yeah, I think that Amazon has proven in the past that they can do anything that they darn well please. So when Amazon decides, I think that Nate said it very well, when Amazon decides that it's beneficial to Amazon, we will see a more widely available parcel delivery service from them. And frankly, we talk about LaserShip, we talk about OnTrack and all of these emerging carriers, all for it, bring it on. But the only entity that I really see having a viable national network whenever they want is Amazon. They have the assets around the country that enables them to have a delivery network. And that's always been the barrier to entry, right? For anyone that wanted to have a national delivery network inside of the United States, it's heavily, heavily facility based. You must have a certain saturation of those facilities to make a marketable transit in delivery. So Amazon has that. What they lack is what everybody lacks, and that's the labor to make it happen. When that becomes available and when Amazon decides to do it, I think that it will happen.
I still think, Mark, we alluded to the problems that FedEx is having with their contract final mile carriers. Amazon's not too far separated from that. They do not they outsource everything as far as I know for that final mile.
Very similar, yeah, very similar model to FedEx's.
Yeah, Sean, what's your thoughts on Amazon?
Yeah, I mean, look, they're absolutely necessary for a lot of our clients and a lot of shippers out there. And I think just building on what Mark said, I mean, UPS and FedEx are the two monsters in the room, but to somewhat dance the same dance, right? So what's interesting for me is when Amazon enters, it's really going to be the first true competitor those guys have seen, which may fast forward a lot of the stuff we've talked about today. And, I mean, and quality's extremely high at Amazon. And that's the other thing I think about too as they enter the market, and FedEx and UPS do a good job. That bar will likely get raised, right? Because they do a great job. And to Mark's point, automation and minimizing labor, and not to mention the technology side. I mean, the stuff Amazon doing far exceeds what I've seen from UPS and FedEx. I think it'll just be interesting days. And like you said, I know they've announced a couple big direct retail relationships so far. So I think we're going to see that come quick in 2023.
All right, Nate, I'm going to let you have the final word on Amazon.
Yeah, I mean, I think I said a little bit of it earlier, and Mark and Sean touched on parts of it too. But I feel like it won't be a massive market entrance from Amazon with an integrated end-to-end network at the scale of FedEx and UPS. I just don't think it makes sense. So if it is at scale, I think a fair amount of that may be at the delivery stations, so at the final mile. And it's partially because of the fact that, Sean, you mentioned that the quality from Amazon with its service, process, they seem to have near perfect data. And so when you introduce variables to that, which package forecasts I think would fall into that category, then you create inefficiency. And so that's where I don't think that's just a massive entrance into the market. It would be very, very selective, because as I think most carriers can attest to, having to respond to package volume fluctuations from thousands of customers is not easy, as we're seeing right now in the market, especially from FedEx. So I don't think that that's going to happen, but of course it wouldn't surprise me if Amazon has some formal, say, service launch in 23.
All right, let's do takeaways. I'm gonna go around the circle the opposite way this time. Sean, Nate, then Mark. I'll go ahead and give mine first, so Sean has a minute to get ready. So really, I'm going to go back to the title, volatility. Okay, we are expecting to see continued volatility, and in volatility there is opportunity for growth. Okay, make sure you are working with your partners, your consultants. You're bringing everybody together. Make sure you've got updated software before you run into peak. My favorite thing to tell anybody heading into peak is make sure you're going to weekly document the good and the bad. Okay, everybody fails to that bad stuff, and then sometimes they forget what went well. And so when they start up in late January, early February, talking with their vendors as to what they want to change, they throw the good stuff out with the bad, and that becomes bad stuff the following year. So document starting now, good stuff as well as bad. All right, Sean, what's your takeaways?
Yeah, I mean, I think the big silver lining is that there may potentially be some capacity, and these carriers may actually show up and pick up the packages this year. So that's one big takeaway. That's exciting, I think. And so I think that's most important. I think just having these discussions early, right, and open, and leveraging partners and experts. I mean, I can't minimize that enough. This stuff is complicated. You've got to get in front of it. You've got to talk with your carriers now, right? UPS, FedEx aren't going to reach out to you, right, based on their shopping volume, right, Nate and Mark. So I think staying in front of them, leveraging strong partners. I think that's really it.
Okay. And Nate, what's your final thoughts?
Well, my brief bullet there is be intentional. So I know that's insanely vague, but the thought there really is, we touched on earlier, beginning next week, so Q4, is being intentional about whatever it is that you are going to do in 23 around your parcel program. And so if that is, you first have to assess to figure that out, that's fine, but start that very soon, and then be intentional with what your goals are and what your actions are regarding carrier rationalization or diversifying your carrier base, and not I guess kind of taking a wait and see approach and being too cautious, and then it's March or April and you're way behind. So I think that's what I would recommend, just very generally speaking, is to be intentional.
Excellent. And Mark, you've got the final takeaway.
All right. So I think 3 things for shippers to keep in mind. Firstly, be informed about what's going on in the industry and stay informed on things like UPS, their labor, Amazon, what they're doing, FedEx. Be informed, because those can lead to talking points with carriers and your understanding about what's available. Secondly, I would say continuously monitor your program and increase your flexibility and the ability to respond to all of the changes that are happening. You know, you don't have to be $100 million program to incorporate alternatives for yourself. And I think that people need to build in flexibility at whatever scale you're in. And lastly, I would say to find yourself partners that can add to your understanding, help you to develop out your technology roadmap, and help you to increase visibility into different scenarios that you could execute on and evaluate.
Well said, well said. So for those of you who are interested, we alluded to this earlier. Here's just a couple of resources that the 4 of us found we all frequently use to try to stay up on the marketing trends. Of course, I've got to talk about the ProShip blog, or my excellent marketing team would kill me. So please look at that as well. Remember that you can download the handouts, which includes this slide deck as well. We are going to, if our marketing team will let us do 1 or 2, we are going to do questions and answers. But of course, here as well is ways to contact us. We love to hear from people. We answer a lot of questions. Even if you're not going to use our services, we end up answering a lot of questions. But that being said, one of the questions that came down is, how likely do we think it is that UPS will or will not strike in 2023, from Chemcrest?
I do not think that 100% work stoppage will happen. However, I do think it will be threatened. If you look out at the Teamsters website, anybody could go look at it, and you look at the specific UPS notice, it sounds very hostile. So I think there will be a lot of saber rattling. I think there will be a lot of threats. But at the end of the day, if UPS is the intelligent, well-managed company that I know it to be, they will avoid a work stoppage.
Yeah, and I think, well, so I'm not going to predict one way or another, but I also don't think necessarily it will take a full work stoppage or much of a stoppage at all to impact the market. Granted, you know, if there's a lot of, I won't say negative information, but it doesn't look like it's progressing that well in Q1, okay, probably not that big of a deal. As you move through Q2, especially the largest customers and large customers who are almost maybe entirely dependent upon UPS, that starts to be a concern to where action might be taken to start to move volume, which you don't want to be in that position anyway, but it starts to create activity in the market, which we opened with, I think, as far as it being uncertain. And so I think that's where Mark mentioned a minute ago, incorporating flexibility into your program, not for the sake of adding carriers, but having a process technology in place to where there's at least some way to mitigate that on your own is something that needs to be done, because if it gets into June, there's going to be a lot of nervous UPS customers.
Sean, your thoughts?
Yeah, you know, I'm going to leave it to Nate and Mark on this one. They're so much closer to it than I am. I'm not gonna...
No problem. Yeah, I'm going to say Nate said exactly what I was going to say. make
Yeah.
sure you're ready. Have that second, third, fourth carrier that you might need to switch over to already in your system. All right, guys, last question, and then we're going to have to end this. So the United States Post Office asks, where do we see last mile headed with the rising costs of doing business? So I kind of am interpreting this as delivery keeps getting more and more expensive. And it's kind of rolls into another one where somebody asked, when will parcel shipping get so expensive that brick and mortar becomes relevant again? So I'm kind of combining those two questions. Do we think that's happening? I'm going to go with my opinion here. I don't know. I continue to see customers, retailers eating ground shipping while extending their networks to increase the number of 1-day and 2-day deliveries that they have. I think that will continue. A lot of conversations we're having with retailers is how do I add same day and entice customers into it, because then we can recover some of our logistics costs there. That's at least what I'm seeing from my small part of the world. What about you, gentlemen?
I think that retail brick and mortar is relevant, and I think that's one of the reasons that we have seen softening in the e-commerce portion. All those same store sales are down year over year. There is a sort of return to brick and mortar that can't not affect how much e-commerce happens. So if we're wondering where volume went to from 21 to 22, brick and mortar has to play at least a small portion of a role there.
Yeah, I think it's interesting how quickly we shifted from buying so much product during the pandemic with all the cash out there to, people shifting to services, right? I mean, people are out there right now, right? If you guys are traveling, the airports are full, the stores are busier than I anticipated. So I think there is that desire by folks to get out and experience the world again after the pandemic. So I don't know if the retail bump is somewhat artificial and people will head back home after this, or where that will level out, but we're definitely seeing that. And we're seeing that on behalf of our shippers, more volume heading to retailers.
Yeah, so I think there's two huge factors in kind of answering the part on the last mile cost and whether that influences kind of a shift back to brick and mortar retail or kind of how retailers conduct e-commerce. One is Amazon. If it is so convenient to get delivery, period. And unless that changes, a material shift away from delivery as a market or as an economy, I don't see that happening. And so it's an unfortunate thing, and it's been happening for a long time, that everyone has to at least try to offer something not to on the level of Amazon, but at least convenience and fast delivery. So I still think that's going to be there. Now, the other thing, as far as the costs go, though, is inventory, distributed inventory, the ability to distribute inventory as a retailer close to demand. So not just store demand, but digital demand, and shortening the delivery distance, lowering the cost because there's greater delivery density. That's something obviously that Amazon has been able to do. Target and Walmart can do it because of a massive store footprint and very wide and deep inventory coverage. Not very many other companies can. So if that advances, then you'll have more volume closer to the customer, and final mile costs are more palatable. And so there, again, if that were to happen, delivery stays.
All right, gentlemen, I'd like to thank you all for joining us in this year's Pros Who Know. It was great. Hopefully we will have this out on the internet for everybody to review at their leisure. Again, thank you all, and to my audience, thank you all for joining us this year as well. We will see you again next year.
Thank you, guys.
Thank you.